The Ghana Chamber of Bulk Oil Distributors has announced that there will be a 15% reduction in the prices of petroleum products this week. According to them, the reduction has been necessitated due to the marginal decrease in the world market price of petroleum prices, which is refined. Now, the chamber also assured the prices of the products will continue to be reviewed downwards, so as long as the cedi rises and the prices on the world market are also going to reduce. So if it happens, they will be able to manage the price to the benefit of the consumer. And we're working the lines to get the executive officer, Senyo Hosi. He is the chief executive officer of the Chamber of Bulk Oil Distributors. If we get him on the line, we will be able to speak with him on what really informed this decision and how likely are we to see further reduction in that regard. This is still Midday Live on TV3. We hope that we'll be able to get Senyo Hosi on the line. So if you're just joining us, the big news is that there's a possibility that we're going to be having a 15% reduction in fuel in petroleum products this week. Now, this, according to the reduction, has been necessitated by the marginal decrease on the world market of prices of refined petroleum products. Now, the chamber assured that the prices of the products will continue to be reviewed downwards as long as the cedi rises on the world market price of refined products. We are working the lines to see if we can get the chief executive of the Bulk Oil Distributors Chamber, and I will speak to him, Senyo Hosi. Good afternoon, Senyo Hosi. Thank you very much for joining us.
Yeah, good afternoon.
Okay. Is there any truth at all in this story we are hearing, and what has informed this decision of a 15% reduction, if it is true? Hello, Senyo.
Hello.
Yes, can you hear me?
Yes,
All right.
I can hear you.
Good.
I lost you.
My question is it true that there is a likelihood of a 15% reduction? And if it is true, what has informed this decision?
Yes, I think that you put it right when you said that likely. Prices are liberalized now, so all the operators will have to fix their own prices. What we as a chamber are taking a step to do is to be watching the markets and generally advising at our side what potential SREF changes may be. We definitely expect it to change, possibly in excess of the 15%, but we cannot really tell as of now exactly what it will be, because it's the operator's call. And in any case, the next review window starts on the 16th of July, which is on Thursday. And we'll need up to tomorrow to be able to establish exactly how the FX rates will pan out and have a fair idea of what a fair XREF price should be. XREF prices are not export prices. The OMCs would have to fix their own prices. They don't just deliver products, they also offer consumers a service. And to that extent, they also have a certain latitude to which with which they would fix their prices. But at our level, we intend to run something quite more open and public, so people would see fairly what extra prices and then the trend of events, just like you see with crude, with refined products on the international market.
Right. Are there other factors that would have to be considered in determining this, apart from the cedi-dollar relationship and then also the services that is provided by these oil distributors? Is
the world market price. The key things that will influence the XREF price is the world market price,
right?
And then the exchange rate. The other factor is the BDC's premium and margin, but that is for operators to establish. But the model would work, we would definitely be working what the MP had approved much earlier, and using those parameters, we'll develop something called the fuel flex rate. Fuel flex with the fuel effect. So the aggregation developing a composite index of exchange rates of oil financing banks and establishing a forward rate using there's a whole formula for it. And we box it up with the world market price of refined products, and we can establish what we will call the XREF price index.
Great.
And you'll be able to see the trend. The FDC is moving. It may be well above the 15%. It just depends on how things pan out by close of business tomorrow.
Right. Seems you're speaking a bit of technicalities there, but the good news is that there will be some reduction, but as to whether it will be 15% or not, we would have to wait up until tomorrow to see that.
Yes, and that will be just subject to operators, what the operators would want. If OMC think that they are better off selling at price A or price B, price C, that'll be up to them. It's not necessarily going to be a fast rule. What we want to put out is an indication of market trend as far as the XREF, ex-refinery price is concerned.
Okay. Thank you very much, Senor Hossi. He is the Chief Executive Officer of the Bulk Oil Distributors, the Chamber of the Bulk Oil Distributors.